Welcome back to my YouTube channel, guys. Okay, today I'll be teaching you another type of breakout structure. All right, we are on gold 1 hour time frame. Remember what I said, any time frame you are on, whatever you see there, that is what you will take from there below. So if you're on 1 hour time frame, you see a pullback on 1 hour, there's possibility that a pullback have occurred on 30 minutes, 45 minutes, 15 minutes, and the rest, but not on 2 hours, on 3 hours. Okay, so a pullback is a pullback depending on the time frame you are on. That is, if you're on 15 minutes time frame and you see a pullback, there is a pullback, but it is on 15 minutes time frame and below. If you're on 1 hour, it is a pullback, but it is on 1 hour time frame and below. If you're on 30 minutes, it is a pullback, but the pullback is from 30 minutes and below, not above. Okay, so that being said, do not forget to subscribe to my YouTube channel. You gain knowledge here. 1 month, that's all I tell you, that's all I give you for you to improve. Okay, so now let's dive into the video. Okay, now I'm looking to show you this type of breakout structure, so that when you come across it on your chart, you know that structure have broken, and then you can put your Fibonacci and wait for an entry. Okay, it works on all pairs. Okay, so let's proceed. So we have this candle, no pullback yet, no pullback have occurred. Now we have a pullback. Since we've gotten a pullback, that means we now have a high, right? So let's mark our high. Now this is our high right here. Okay, this is our high right here. Why is this our high? This market made a push to the upside, then pull back, then that is it. So let's continue. Let's see what happens. We've marked our high. Then let's proceed. We've seen that. Remember, we've only gotten a pullback. Okay. Now we've gotten a week. Now that particular structure have been weaked. Now will you say structure have been broken? The answer is no. Structure have not been broken. Okay, but let's proceed. Have structure been broken? If you said yes, you did not get it. Structure yet still have not been broken. Okay, this is just a week. Most of the people will say it's a grab of liquidity, so on and so forth. No, this is a fake out kind of. All right, let's proceed. Now have the market broken structure? Now most of you will say that I've said in my previous video that one candle cannot act as a break of structure. One candle closing above cannot act as a break of structure. That is in a bullish scenario. Then in a bearish scenario, closing below. Okay, but I can assure you now that market has broken structure. Now if a market should weak its structure in this manner that you are seeing here now, weak it, close inside, weak it again, close inside, and then whether it weaks it again or not, but provided it has weaked it and closed inside, any candle that closes above that week, above that candle's wick that closed inside the range again, inside the structure, is considered as a break of structure. So as I'm talking to you like this now, as I'm talking to you now, I can easily say market have broken structure. My next target now is to put my Fibonacci, right? So when I start pulling my Fibonacci, remember one thing, the market can still keep buying, so we keep trailing the high. All right, so that's it. So let's do our Fibonacci to this level. So this is our low and that is our high. Okay, sorry, I think it's too high. All right, so we've gotten the high. Okay, Now, what am I waiting for? I'm waiting for a pullback to buy. I'm waiting for a pullback to buy because this market have actually broken structure. Now, where will my pullback be? Within the range from 0.50 to the level of 0.78.6. That is where I'll be expecting to buy from. Okay, so let's proceed. Now, do you see? Do you see? Now, this is now what we call the graph of liquidity. You can see that this low here, this particular low here was wicked by this red candle. Now, this is what we can call a graph of liquidity because we are actually on an uptrend. So when the market goes below to wick the low, it is trying to grab liquidity because so many of us who must have known that this is a break of structure must have entered for a buy within these zones from the 0.5 to 0.61.8 to 0.78 to 0.786. So they know that most of us will put our stop loss at level 100 here, at this zero point here, at this level here. All right, they know we'll put our stop loss below, so they will go to grab the liquidity to fuel the market to buy. So let's just see what happens. Let's see what happens. So let's play it. Yeah. Okay. Can you see what's going on? Boom. Can you see that? Now, this is to show you that this is a proper break of structure. What I just taught you now shows that this is a proper break of structure. Okay, so let's see. Now the market have broken structure. Remember, having this alone, this big blue candle alone, will not determine the break of structure. So I cannot say that the market have broken structure because of this big blue candle here, this big bullish candle here. I cannot say the market have broken this structure because of this big blue candle. Okay, that is the bullish candle, because the bearish candle can come in and close inside this range, and that invalidates the break of structure. Okay, so another candle needs to close what? Above this particular structure here, so that we can classify it as a break of structure, which it did. You can see. So market have what? Broken structure. So any other thing you will do now, all you need to do is to do what? All you need to do is to actually do what? Pull from the low to the high. Okay, is to pull from the low to the high. So guys, I will see you guys later. All right, I'll see you guys later. I hope you understood what I just taught you now. I hope you understood it. Okay, so I will see you back guys later in my next video. Subscribe. Okay, share the video. Have a nice day. Bye.